One way to follow the smart money is to look for companies whose options are exhibiting unusual options activity. Just as other investors scour 13F forms to see what billionaires and big money management firms are buying, tracking unusual options activity can unearth stocks that are ready to make a big move. Whether you're buying the underlying shares of a company or a call option to buy some in the future, it all boils down to fundamentals. Some companies have them and some don't. On April 22, these three stocks attracted higher than normal investor interest on their options. All three also have excellent fundamentals. Canopy Growth, CGC. I don't think there's any question that Canopy Growth is a big disappointment for shareholders. Down 40% in 2022 and 79% in the past 52 weeks, CGC is trading where it did in June 2017. It's been on a 5-year roller coaster ride that everyone just wants to end. The Canadian cannabis company that's backed by Constellation Brands, STZ, had May 2022 $8 calls trading on April 22 for 12 cents a call contract. The contract volume on the day was 4,057, 31.9x the open interest. Currently trading around $5.57 a share, it's got 28 days to jump 43% to be in the money. The company's 14-day RSI is 33.92. Anything below 30 is considered oversold and anything above 70 is overbought. Canopy Grow is heading into oversold territory. While it's old news, the company's October announcement that it acquired Colorado-based Wana Brands for less than $300 million, North America's #1 edibles brand, is a very big deal. Edibles are a big part of Cannabis 2.0. Once the 800-pound gorilla, Canopy is now on the outside looking in. The Wana buy will help it get back into the cannabis club. Brinker International, EIP. Investors were hungry for Brinker's May 2022 $45 calls on April 22. Trading for 89 cents a call contract, the contract volume on the day was 3,605, 16.9x the open interest. Currently trading around $38.65 a share, it's not too far off being in the money. At present, the company's 14-day RSI is 57.48. That's a little closer to overbought than oversold, but generally in fair value territory. So, what have investors all psyched about the owners of Chili's Grill and Bar, Maggiano's Little Italy, Just Wings, and Maggiano's Italian Classics? The company just announced that its Chili's concept just expanded its testing of Rita the robot to 51 more restaurants. The company, which started testing Rita in 10 restaurants in October 2020, has figured out what tasks the robot does exceptionally well. It will now test those skills out in 61 Chili's restaurants. In recent polling in some of our Rita-fied restaurants, 82% of guests felt their experience was better overall because of Rita, and 77% said their server spent more time with them due to Rita, Nation's Restaurant News reported on April 15. If there's one thing the pandemic taught the restaurant industry, it's that innovation is as important in food service as it is in any other industry. HPQ. This final company is showing unusual options activity because Warren Buffett has been buying the PC and printer manufacturer's stock in a big way in recent weeks. On April 7, Berkshire Hathaway, Break.B, revealed that it had acquired 121 million shares of the company. HPQ stock rose by 15% on the news. It was HP's best day in the markets in more than 2 years. As a result of the purchase, Berkshire is now the biggest HP shareholder with 11.5% of its shares. It is also Berkshire's 12th largest position, accounting for 1.3% of its $338.2 billion equity portfolio. The November 2022 $40 calls were trading on April 22 for $3.05 a call contract. The contract volume on the day was 2,208, 8.83x the open interest. Currently trading around $37.19 a share, it's less than $3 from being in the money with 7 months left in the call contract. At present, HP's 14-day RSI is 46.76. That's right in fair value territory. As Barron's recently reported, HPQ is a fair business trading at a cheap price. How cheap, you might ask? He paid 9x earnings for his 11.5% stake. No wonder options are flying off the shelf. While I like all three companies, I would say that the length of time left on HP's call contract makes it the wisest option to buy. As for which is the best company, I would say Canopy Growth has the greatest risk but the most upside. Happy investing.